Hey, welcome to the Stock Market Starters YouTube channel. Today we are back talking about fundamental investment analysis and looking at real life examples. Today we're looking at another car company, and this one today is looking at GM, General Motors. What we're going to do is hop in and look at the chart. We're going to look at the technicals in terms of an investment perspective. Then we're going to hop in and look at the fundamentals and look at how the company's financial data looks in terms of a investment analysis. So let me show you guys what this looks like. Perfect. This is GM, and this is showing a 1-year chart and is showing daily time frames. So we can see GM has gone up quite a bit over the last year with the low down here at 2630, high up here at 5050. Yeah, I mean almost 100% increase here over the course of the last year. And then we came down quite a bit. Now we're back up close to those highs up in here trading today at 4826. Um, kind of interesting to see, kind of cool to see. Um, Other interesting things to note here, dividend payment is coming up actually tomorrow. So that's kind of cool, right? If I do end up buying in, I'll get that dividend payment if I buy today. So kind of interesting to see. Now, when we look at investment analysis, of course, we're looking at a longer term. And so we look at a longer term chart. So this is a 3-year weekly chart of GM showing each candlestick now is a week worth of time. And this is showing a total of 3 years. So we can see we were up here back here in 2021, 2022, and then dropped in 2022. It kind of went flat. I mean, definitely within a range, right? But definitely went flat for a while. Now we've come up, we've broken out of what I would call kind of this old support, right? Or this old resistance line here. Came in, tagged it here, came above it, tagged it again and bounced, almost tagged it again. Now we came below and we're back above. Overall, really, we're not seeing a whole lot of direction here other than we seem to be trading higher, right? Wanting to be above this area that was pretty significant. And we've still got some potential room to move up back into where we were at the end of 2021. So kind of interesting to see that. So going from the technicals, we will also want to look, of course, at fundamentals. So looking at fundamentals, I just pulled up, finance.yahoo.com, looked up GM, and we can see our data here. Now, as we've done, we have our spreadsheet pulled up where we can do our analysis, and we're going to kind of look for our numbers and kind of talk through what each number means. So first numbers we're looking at here are market cap and enterprise value, right? Looking for the valuation of the company, how much is it worth? So market cap up first. Look at here, we got an intraday market cap of 54.443 billion. So that's perfect, 4.443 billion. And really, this becomes valuable in terms of looking at comparisons, right? And especially GM will be interesting to compare to Ford, right? So GM higher market cap, right? Than Ford was at here a couple of weeks ago. So good to see, right? Hey, maybe that means GM is worth more, right? That's what the market seems to be saying. So next, looking at enterprise value. And enterprise value, if I recall correctly, is down here at enterprise value as of yesterday. Perfect. Enterprise value over revenue. Enterprise value is here. Perfect. Enterprise value, we are looking at 150.06 billion. 150.06 billion. So again, we're looking at, hey, what's the overall value of the company? Interesting to see here when compared to Ford, it has a higher market cap but a lower enterprise value, right? Interesting to see that. Now we can dig into why that is, but kind of curious to see, right? So cool. Next up, we're looking for beta. Beta is, of course, going to be up here. And beta 5-year monthly, we got 1.44. So 1.44, a little lower than Ford, but what that means is, right, if the S&P moves 1% or the overall market, then you expect GM is about to move 1.4%, right? So a little bit of a higher beta than some of these other stocks we're looking at, but still lower than Ford. Next up, we want our PE ratio, right? Price to earnings ratio. And that one is right here, trailing 12 months is perfect. And we have 5.44. So 5.44. So that actually is a really encouraging number compared to what we see here, right? That means that you'll only pay, or investors currently are only paying $5.44 per share of current earnings in GM. So that's a really, actually a pretty good number, especially compared to, triple that for Verizon, almost 5 times that for KHC, and then basically double, a little over double that for Ford. So that's actually a pretty good number there. Next number we're looking for is the PEG ratio, right? Price earnings growth ratio. So how much do you pay for $1 of growth in the future? And that one I believe is again down here, PEG ratio, 5-year expected. And that is 1650. Wow, that is wild. Okay. So 1650. Huh. Okay, well that seems wrong, but hey, that's what it says. Um, huh. I'm kind of curious because that's really high. PEG ratio on GM. Yeah, that makes more sense. 28 PEG ratio. Yeah, this is interesting. So let's look at what NASDAQ has to say. That's a good company. Um, Zacks is pretty good in terms of just looking at what these companies' financials look like. GM, yeah. Huh. That's pretty interesting. So 0.54 here, and we are showing earnings growth 2025. See, that's only showing one. Forecast 12 months forward is showing 0.49. So that's fine. It's a little bit the time frame that they're looking at is a little different. I think I'm gonna use I think I'm gonna look at this one and I'm gonna look at yeah, that's really interesting. 0.49 6. Yeah, what's your site? What is that? Yeah, that's really interesting. Versus here, we're showing a 5-year PEG ratio of 1650. I wonder why. I kind of wonder if that number is wrong, to be honest. I don't know for sure that it is, but very, very interesting. So let's see. So that's 1650, right? And that would be a 5-year, or we could do, 0.52 for a 1-year, which is just weird. But like if we look up Ford, right? On Ford. On Ford. Price earnings like 7.5. NASDAQ versus DAX. I'm just curious what these comparatively look like because that is just wildly different. Right, we're looking PEG 0.79, which is yeah, I mean that's looking at 1 year versus looking at 5 years, so that kind of makes sense. Which is 0.93, and this one, I don't know. See, this is a trailing 12 months, so that's fine. Okay. That's really interesting. So I think what I'm going to do on this one is I'm going to put this at 0.52 um, for GM. I don't know why it's showing 1650. And the reason I want to look, right, 1650 would be an insane um, PEG ratio. Trailing price to earnings, forward price to earnings. Yeah, I mean, that just doesn't really make sense. Okay, well, let's dig into it. Keep in mind, right, this was 1650 on the 5-year. That seems just crazy to me. But, if we look back at Ford, right there, BG ratio 0.59. Yeah, so that makes more sense. I don't know what the deal is with that one. And it's weird that it's so far off compared to what routers and NASDAQ and Zacks are saying. So I'm gonna go with the Zacks number on that PEG ratio here for GM. But yeah, kind of weird. Kind of weird. So this is showing, the 1 year rather than a 5 year, which is what the most of these are showing. But the 5 year is showing 1650. So I don't know if I believe that. I think there may have been a mistake there somewhere because that just doesn't line up with what I'm seeing on the other sites, right? And certainly we can dig into the financials and actually make these numbers ourselves and find out. But we're gonna go with this 0.52 for now because I think that actually makes a lot more sense in terms of what I'm seeing on these other financial numbers. And let's really dig into the rest of these and see if that kind of lines up with what we're seeing otherwise on the financials. So next up, we want earnings per share. So earnings per share trailing 12 months. So $8.90 earnings per share on GM. So that's pretty good. $8.90. Actually, that's fantastic, right? Earnings per share compared to these other companies, right? $8.90 is a really, really good earnings per share. So that's pretty cool. Dividend yield, of course, we expect to be a little smaller with what we saw on the chart where it showed our dividend. Right forward to dividend yield. So this is showing a 48 cents annual dividend, so 0.99%. So much lower, right? Much lower than that 5%, 4%, 6% to basically a 1% annual dividend. That's a pretty big discount on that. Next, we're after EBITDA. And if you recall, we go, instead of looking at all this, now we go to the actual financials tab on Yahoo Finance, the income statement, and we are looking for EBITDA, which is down here, and trailing 12 months is what we're after. So copy this and put it in here. And if you remember, right, this is in thousands. So what I've been doing here, which maybe this is just sort of silly to write it out this way, but times 1,000. And then, gotta make it actually do it. So equals, and then that's already in commas. So, right, we got 25.261 billion. 25.261 billion EBITDA. So, actually a lot higher than Ford, a lot higher than KHC, lower for sure than Verizon. Right, but comparatively, hey, that's kind of cool. We see they're making a lot of money before the expenses come out. And then we want to look at their revenue trend, right? So looking at revenue, we'll kind of copy this over, starting in the 2022 revenue, which is total revenue right here. And we just want to see what this actually trends like. So we start at 2020, copy, match. And then as we kind of go forward, we should be able to hopefully see the trend. So we can see, okay, right, 2021, they had more revenue than in 2020, right? You can see that 22 versus 27. Right? I mean, we're really just watching, hey, are these numbers growing? It looks like generally they are. So I expect this trend will be a pretty good looking one. But let's kind of get them in here and actually show it visually, because that's just kind of a cool way to compare across and say, hey, are they able to increase sales? Are they able to bring in more money? And so that's pretty cool. So, all right, we've got our revenue numbers. We can see generally they're going up. I think, in fact, they went up every year. So let's do this. Let's do this, and let's go ahead and insert our chart. And we're going to a line chart and just doing a simple one like this. And boom, this is our GM revenue chart. So GM revenue chart trend. What are we calling them? Trend. So GM revenue trend. Cool. So we can see, overall, certainly going up, right? Overall, we can see, hey, kind of flat this year, but still going up and then really rising. The last one that we saw like this was kind of Ford, right? And look how similar those look. That's kind of wild, right? To see, hey, we're going up and we're going up. Also interesting. Look at the actual numbers, right? We started above 120. Now we're above 120 and basically at 180, right? Basically at 180, which is kind of crazy, right? Because we can see those numbers are very, very similar. Looking at Ford's revenues versus GM's revenues, very, very comparable. And that's kind of cool to see because, hey, they're bringing in the same amount of money. How do they deal with that money, right? What do the other financials look like? So, right. Okay, do they pay a dividend? Yes, they pay one, but it's lower than Ford by quite a bit, right? So that's a downside look on this one. How about earnings per share? Earnings per share far higher, right? Far higher. So that's very, very good. PEG ratio, again, I'm a little bit, speculative with this one. Really it's probably a little higher than this, looking at a 5 year versus looking at, 1 year, where Ford is looking at the 5 year. But, the PEG ratio, that makes sense to the PEG ratio. I think I'm okay with this number. So PEG ratio, saying we're paying 52 cents for $1 of expected earnings growth. Great, right? That's a good number. Price earnings ratio, right? We're paying $5.44 per dollar of current earnings compared to 11.23. So that's better. Beta 1.4 versus 1.6. So a little lower, but really pretty similar. And then market cap, we've got two different valuation numbers. Market cap is higher, right, on GM. So that current valuation is higher according to the actual market price. But looking at, debt, looking at cash holdings, it's a little lower. So maybe Ford has some more cash, right? Maybe a little less debt. But from what this tells me, right, hey, look, our two valuation methods are actually really similar, right? This is 10, right? $10 billion a difference versus about $12 billion difference. So to me, that says, okay, really market cap is fine, right? I don't expect Ford to go away. I don't expect GM to go away. They're very, very comparable as far as market cap, company size, as far as revenue. The revenue trends are going up. Honestly, GM looks pretty good. I don't like that it has the lower dividend yield, but basically everything else on this I do like. And compared to Ford, I mean, even earnings are higher, revenues are higher, so we know that GM is doing pretty good here. And comparatively with Ford, they're actually more similar than I expected, which is kind of, I mean, I don't know that there's a whole lot of impact in that, but it's interesting to see for sure. So kind of cool. So I think what I'm going to do is say, you know what, this looks good, right? There's no big red flags to me. This PEG ratio has me a little concerned with what it's showing on here, but I just cannot imagine that this is right compared to with what we're seeing. Otherwise, a PEG ratio of 1650. My guess is because this is not looking at a trailing 12 months, right? This is looking at a 5 year expected. My guess is this expectation here is set weird somehow in the analysis that they did here. So I'm not sure exactly what that's about, but yeah, I mean, this is interesting, right? Last quarter, PEG ratio, 326. So that's a little bit better, still higher than I'd like to see. But you know what, besides for that weird PEG ratio, I pretty much like everything I'm seeing here. And certainly enough for me to go and buy one share as an example. So we'll go from our weekly back to daily. And we can see, hey, we're dropping below that 10-day. This may not be a great spot to buy, really. So if I was looking at this more, from a trade perspective, and really in terms of putting in more than, one share as an example, I would probably wait and see if it could hit the 20-day or, something in there where it's really proving, where it's able to prove a bounce and try to buy where we expect it to go up. But for now, I'm not that worried about it, right? We're buying one share as an example, so we'll do buy. And we'll switch this to one share. Auto is fine. GM is perfect. The limit order is at the ask price, right? So we can see the bid-ask spread right here. We can also see expected price, mid versus natural, right? So, okay, it moved 1 cent. So let me move this up 1 cent. But I pretty much always do limit orders. Day is good. No special instructions. So that's fine. Oh, say, look at that. Now it's moving up a little bit more. So I'll just, hey, put that at the mid, that's fine, and then we'll lock it for Zen. And 47.97 is my expected price. It's on the right account. Perfect. And now we can see, hey, look at that. We've got a limit order placed, and it's moved up a few cents, right, from where that limit order is now, which is kind of interesting to see, right? That doesn't always happen, but the stock's moving, fairly well here. So this is actually good. Oh, yeah, see there it filled. I was gonna replace it and show you guys what that looks like, but hey, it filled. So we got our one share. So I will mark this row, right? Show my investment is live there. Perfect. Along with my others, we can see, hey, there's my one share at 47.97. So kind of cool to see. And this 12-cent dividend should be coming to me with it being tomorrow. So that's kind of cool. Of course, it won't actually show up tomorrow. It'll wait, a little while, and being 12 cents on one share, not terribly important. But right there's that 1% annually, so kind of cool to see. So yeah, hopefully that's helpful, right? Hopefully you guys are seeing how this analysis works. That PEG ratio kind of interesting. You can see, hey, if something doesn't make sense, how do I find out, what it should make sense like? Well, one way is go and look at, comparable sources and say, hey, this number seems weird. Let me go figure out what the number should be, compared to other sources. And then beyond that, I mean, we can always dig in and actually get into the actual numbers. But this will be interesting, right? We can see the revenue trends are very, very different on some of these. I'm kind of excited to see what this looks like when we, graph the whole thing. We've got, of course, our two more stocks to come in. But when we graph them all together, compare revenues, and then we can look and say, hey, what do we think is the best investment opportunity going forward, and kind of make a plan from there. So, okay, cool. Hopefully this is helpful, right? Hopefully you guys are enjoying these videos. If so, let me know, right? And we'll see you guys here tomorrow. I'm planning on doing my next video, and this one is going to be on Main Street Capital. This one should be very, very interesting in terms of this dividend yield. They pay dividends all the time. Um, Never actually have invested in this one, but as you can see, I did one trade here that looks like I got stopped out on. Yep, lost I don't know, $1.50 on that. So anyway, kind of interesting to see how this will kind of come together and work, and looking forward to it. So we will update you guys with our next analysis here on Main tomorrow. And until then, happy trading and happy investing.